weekend all. I'm Epstein with your metal market wrap-up, and this wrap-up is for the weekend of, I'm on Saturday right now, August 3rd, 2024. I've been watching the Olympics all day. I hope you have. They are exciting as can be. I just love it. It's one of my favorite times of the every 4 years to watch something, and I just love it. All right, what I didn't love is the action, obviously, on Friday. The jobs report shocked people, that's to say the least. Let me bring you to the report, and I'm doing this in each of the videos. When you come to the farm payrolls, I highlighted in red the shocking parts. We were expecting 185 to 175,000 jobs. You got 114. That was a blowout to the downside. Then unemployment rate was expected at 4.1%, jumps 0.2 to 4.3, and they revised down the amount of jobs in June by 27,000. Now, I don't know if they'll revise these jobs, but there is something they'll do, and I'll show you a chart in a minute that I expect. When you go to the earnings part, it fell by 1/10 on month over month and year over year. Now, this is the chart I want to show you. I rarely show this, by the way. If you look at the amount of jobs that were done and people not at work due to weather, you heard what I said, to weather alone, they are talking that. But I think there's a combination of weather and the automakers that retool in the month of July for the new product years, and people normally get laid off. Some declare unemployment, but for the weather, Hurricane Beryl, and all the storms that came in afterwards, this is not normal. I mean, there's other storm years that we've had. So do I think a lot of these people will go to work? Let me be clear, as slow as I can with my mouth. Yes. Is it half? Is it more? I don't know. But I'd be shocked if it's just temporary workers let go all of a sudden in July when the rest of the summer is yet to come. I could see it mid-August as you're winding your operations down, but mid-July, I think it is more weather. Keep in the back of your mind for Monday morning, you're going to get the final July service sector PMIs from S&P Global Group, and the ISM supply management, the ISM numbers will come out, and for the service sector, they think the index is going to go back to expansion of 48.8 from last month. Now, if they're going to expansion on the service sector, they got to have people that came back to work. That's why I'm thinking the jobs number, I don't know if the word revision's right, if people going back to work we'll see happening, but I think it was an outlier number. That doesn't mean anything. The market believed it. The market went down. You're in a full-fledged correction. Now, what does the word correction mean to chartists? It means in stock indices specifically 10% down from a current or most recent high. In this case, they'd be the all-time highs because they were basically up there. Or 10% off bottoms. Got it? You're in bear phases when you're 20% off highs, and bull phases when you're 20% off lows. Does that help you with that? Okay. The gold market, and that's what we're talking about here. People got slaughtered. If off this report, they jumped in and they chased the metal markets and the gold and silver. I just want you to see silver down $1 off its high. Gold market off $60 roughly off its high, $55 off its high. Copper, 3 cents, and not that much down in the platinum, more of a normal trade. When you look at the gold market on a monthly basis, then this is the first week of the month, you started off on a down foot, down 0.3. Okay, not a big deal. You're back up into a triple top zone on a weekly close. Even with the market down as it did, doesn't mean anything. Off the highs, that is. It doesn't mean anything. You're still up here knocking on those doors. Where it meant something is on these charts. And as I said, traders that chased this market and bought it all the way up on the weekly chart, watch out. You got to be careful right there, all right? Now, remember, a weekly chart is still looking at August gold. A lot of them are continuation charts. I'm looking at the D's gold, but it doesn't matter. A chart to me is a chart, and you can move these to the D's if you want, but I use the continuation most of the time here. You have higher lows, higher highs. Bullish. Until this market gets underneath 2351, I am friendly this market. And you can see that the 18-week average is 2360.50. So I wouldn't be surprised if you get traders buying there with stops under 2351, and if it gets under that zone, they go, I don't know what we have. Market's more bearish at that point than bullish. You'd have lower highs, lower lows. If you don't take out these lows and you move up, you need to get over the 2488 level on this chart and close over that to say another level to the upside's happening. What's holding the market back? Do you see the black dashed lines? They're called Bollinger Bands. This is an algorithm that John Bollinger developed. And in a nutshell, what this does is, as I look at this market, it's an algorithm designed to keep the trading range of the market basically within it 95% of the time. So when markets get over that, you have to say, well, it's only going to stay out of it 5% of the time. I even went further and I did counts. I said, okay, is it 5 days over that in a row? So I started counting times that it was over in weekly charts and came up with fascinating results that I share in my charting course, and if you write me, but not here. It's only to my subscribers. But higher lows, higher highs, that's your resistance. So I'm going to repeat, get over that number, you're over it, and you're narrow enough to say, we're starting to break out from sideways action. I can still make arguments here into this 2600 mark. I'm not scared of that. I'm still friendly gold. If the Fed has got to go and lower interest rates, that means they're going to try to spur on the economy. If they spur on the economy, in the end, they spur on demand. If they spur on demand, that chases goods. If that chases goods, in the end, it could lead to some inflation. When we look at the gold-silver ratio, you now need 85 ounces of silver to get 1 ounce of gold. It's over this number, which tells me gold is stronger than silver. Get under that number, you need less ounces. Silver stronger than gold. When I look at the silver chart, you have higher highs, lower lows. That is bearish. And I'm looking for pretty big support coming in copper here at the 393 to the 401 level. You've heard me talk over and over that I thought the 405 area might support the market. On a weekly continuation chart, you're at 410.30 right now. So we look at that. The platinum market, lower highs, lower lows. In a bear mode, you'd have to take out 10, 15, 20 to change that. The pros are probably going short in this area, but they're already oversold. Do you deploy new money to want to do that? That becomes a big question. And in the dollar, I am the first to admit to you, I have said continually this summer, since June, I don't know what kind of market we have. I've said, I don't know if it's longer term bullish or bearish. The jury's out in my opinion. Well, we're trying the downside. If there is follow through, and let me give you the definition of follow through. You finished up at 102.98. The Bollinger Band was 103.20. So we're under the Bollinger Band and in the bottom, very bottom of the trading range for the week. If you make a lower low this week, and you close in the bottom part of the range. Same way, it's got to be at the very bottom part of the range. Then I say that you've made a long-term top. Before you take this out, you can get back, maybe even challenging the 100 level. That's my news, by the way. So I look at all this together, try to figure out what we've got through here, and I help you in the mornings with it. My idea and my purpose is to throw trade ideas out at you. I don't manage people's money. I have my own. If you want to follow ideas, that's what this is about. And instead of me just writing a report and saying, well, let me tell you, I'm bullish this, I'm bullish that. No, that's not good enough. Why? It doesn't work that way. Why am I bullish? Well, we're going to rip the charts apart. You'll see that there's window envelopes on them, something you don't see here. You'll see that the markets are sitting back and forth, trading sideways through here, as the market is going with that, all right? You'll see that the market's got the 100-day average. You'll see that the market's sitting here much lower in these areas down here. Window envelopes are very, very popular, something that all traders should get a feel for, because not always does a market go to a key moving average or a Bollinger Band. You want to see where the probabilities are that it could stop in that range to the upside or downside. So I put that together. I cover 40 futures charts, and I do those at 6 in the morning. I get them published for you very, very early, obviously, because then we're going to move into the spider trades. The stock market opens Chicago time, 8:30. I'm recording 20 minutes later on average. And I'll have that in your hands in no time. And we're doing the same thing. We're going to look at the daily charts, the weekly charts. On the weekend, we do weekly charts, looking at dailies to see points. And during the week, Monday through Friday, we're going to look at the daily spiders, stocks, ETFs, and come up with ideas, trade objectives, points, long-term, short-term trades, all types. How do you get this? You go to iraepstein.com under research, or better yet, move your cursor right to the top here, and you'll be able to take it from there. I'm Ira Epstein. I'll catch up with you all Monday. Have a great weekend.